Well, let's go deeper now into Turkey's economic outlook. Professor Doga Ulas Eralp of American University joins me now live in studio. Welcome to the show.
Hello, thanks for having me.
So, as we now know, the Lira tumbling 20% on Friday, high inflation, what some have called unorthodox monetary policies by the Turkish government, among other issues. Just how dire is Turkey's economic situation right now?
Well, Turkey's economic situation has not been giving any positive signals over the past 2 years. That's mainly due to this bloated economic development model that focused mostly on construction. And many such mega projects that Erdogan actually pushed for, like the third Bosphorus Bridge and the third airport, which is supposed to be the world's largest airport, got a lot of attention from the creditors, but they agreed to give these credits only as long as the Turkish government provided a guarantee of payback. And obviously now Turkey is having a hard time convincing its creditors that any of these credits would be paid back.
So just how central is debt to what's happening in Turkey's economy right now?
Well, debt is obviously central, but rather it's the management of the debt. It's not done professionally. It's not done in a bureaucratically accountable and clear manner. Everything is now handled rather politically, and this political handling of economic matters is actually what creates so much unease across different markets, and primarily in Europe right now.
Now, as you mentioned, Turkey was already going through its share of economic struggles over the last 2 years. So what now do these issues with the US now doubling down on these two key exports for Turkey? What does that add to the situation?
Well, obviously, when you look into the US imports of steel from Turkey, it only adds up to 4% and only 1% in aluminum. Obviously, this is not a huge number for the US, but for Turkish steel and aluminum manufacturers, this definitely would have a significant blow. But more importantly, it's rather the message US is sending across the globe to emerging markets. As you may as well know, Argentina is going through one of its crises now. It may as well be Turkey with the plunging of Lira. So this should rather send alarming signals to world markets.
Now, a lot of economists are worried about contagion, about whether or not this will spread to not just other emerging markets. We saw that the ECB chief was telling the Financial Times that he's also concerned about how this is going to affect European markets. What are your thoughts on this?
Well, when you look into how much the European markets actually hold credits for Turkey, you see the Spanish finance sector holding around $83 million. Then we have the Italians, and then we have the French. So the total number is around $140 billion. And when you look into it, the number itself may not sound that big, but it actually may have a cascade effect. And when you look into the financial situation in Italy and elsewhere in Europe, this may actually start what they call a contagion. So the Turkish government needs to act fast, and they should act actually yesterday.
So what do we know about Turkey's plan to contain this economic situation and perhaps get Turkey out of it?
Well, that's something I hope the minister in charge of economy brought a little bit more clarity today in his very much hyped up press conference, but we unfortunately did not hear anything substantial. We hadn't heard any numbers. Rather, he emphasized the central bank would be independent, but rather in the new executive presidency model, they actually do quite the opposite. The head of central bank can't make any decisions without the approval of President Erdogan. So knowing that the minister is actually Mr. Erdogan's son-in-law, this actually brings a lot of question marks.
So ideally, what do you think Turkey would need to turn its economy around?
Well, Turkey needs transparency, Turkey needs accountability, Turkey needs a certain level of emphasis on independence of free markets, and there should be minimum interference from the political authority, which at this point in time we see none of that.
And just recently, we saw that President Erdogan said he would turn to bonds from China to raise money in yuan instead, and really try and diversify some of the funding versus relying on the dollar and the euro. What's your take on that strategy?
So Mr. Erdogan have been talking about the possibility of joining what they actually envision as some sort of a Eurasian unity. First, he used to talk about this Shanghai Five. Now he actually voiced his intent on joining BRICS, maybe turning BRICS into BRICS plus T. For that matter, he's turning into China, Shanghai in particular, to attract more investment and finance credit from the Chinese financial markets. the Chinese investors are already very much invested in different infrastructure projects. So there's a possibility they may actually finance the third nuclear plant along with the Russians who are already in Turkey. So obviously none of these creditors would replace Turkey's close economic ties with the West, with Europe and US. But I think these efforts are a little too late. So they need to ramp up their relationships back to normal with US and with Europe.
Well, we'll certainly have to see how it plays out. Thank you so much for your insights. Professor Doga Ulas Eralp, professor at American University.